Nikunj, given the fact that the investors on Wall Street are hinging on these key data points and macroeconomic data points, and we've seen the first winning day in September, is this a telltale sign of what's to come?
See, Avan, it's good to see that global cues have stabilized. It's good to see that it has, that selling which happened in crude has not translated into a ugly risk-off rally for ugly risk-off sell-off for other asset classes. Yes, end of August was not all that strong for financial markets in general, but the comeback last night on Wall Street and this morning in Asia, I think is heartening. I don't think you've seen the end of the volatility in global markets because there are just too many moving parts, and those moving parts in the near term, I think, will ensure that the volatility is real and volatility is here to stay. But if you look at Indian markets in isolation, and if you look at Indian markets, what they did, we were supposed to go down yesterday because of global cues. But folks, what happened? Indian markets crawled their way up. We were in the green, courtesy the bank nifty and the consumer staples and commodity producers. So I think it is evident that in India, the outperformance is the real deal. The outperformance is here, and the outperformance is here to stay. At a global level, what is happening to commodity prices, at a global level, what is happening to crude is helping India on the margin, and more than the micro India story, suddenly the global macro seems to be helping us. So every decline is turning out to be a buying opportunity for Indian markets, and that I think is the most heartening feature as we stand. We'll talk about specifics here, but for me, what really mattered is that on a day when you were supposed to go down because global cues were not strong and supportive, Indian markets closed in the green, and that is a clear indication of the outperformance, and that is a clear indication that India now becomes the market of choice.
India has been the market of choice, of course, given the outperformance that we have seen recently. And yesterday as well, we closed at the highest point of the trading session, just around the 24,950 mark. Interestingly, some of the banking names were making a comeback. So ICICI Bank was holding comfortably in the green. In fact, it was one of the top pullers for the markets yesterday. Kotak Mahindra Bank, HDFC Bank, these were some of the other gainers. And by the end of the trading session, SBI also managed to catch up. There was a slight tinge of green by the end of the trading session as far as SBI goes, so just very close to the flat line. FMCG, that was the talking point yesterday, with that HUL stock hitting the all-time high levels. Some sort of rejig coming in for the ice cream business there. What was dragging the most was clearly the global facing sector. So IT, metals, these were the ones which were the drags on the index. Broad indices ended in the red too, but I think yesterday it was the outperformance that came in from the banking index, which was interesting. But Nikunj, banking index has been an underperformer. I'm not sure if we should take any cues from yesterday, but FMCG was also the shining star.
See, Nisha, one of the most unspoken factor in our life is weather. When the weather changes, we change what we wear. And we have to understand that when the weather changes, you have to approach things differently. And I think the weather in the global financial landscape seems to be changing. And from what could be called as an environment of interest rate hike, you are going to an environment of interest rate decline. Interest rates are the central theme which tend to impact two large clusters always, financials and commodities. The strange part here is that even though interest rates are coming down, commodities are coming down, and when interest rates, they typically come down, financials and especially wholesale borrowing companies, they tend to outperform. And when interest rates globally, they come down, that act as a pivot for flows to come back into Indian markets. Now, why am I talking macro when Anisha has just flagged off a point on banks? The reason why I'm flagging it off is because the turn in macro is also a function. The turn in banks is also a function of what is happening in global macros. And globally, if yields they come down, foreign institutional investors will be forced to come back to emerging markets and a performing market like India. Within that, banks becomes the first port of call, and banks have been suffering not because of earnings or NPAs or growth concerns in the economy. They've been suffering. Why? Because of FI selling. And if FI selling comes down, which it should, because macros are now favorable for emerging markets like India, because commodities are down and rates are coming down, then banks, they tend to outperform. So we'll get into the micros of the banks, which is a good bank and which is a bad bank. But macros and financials and commodities are two sectors which initially get deeply influenced by macros and then micros later on. And I think the macro, like I said, the weather is changing, and that is the most unspoken aspect of life. That weather changes, you dress differently. If the environment of interest rate is changing, you invest differently. That is very simple.
If you like this video, then like, share and subscribe to ET Now.